is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 5th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can dial on in right now, 877-927-6648. If you can't dial in, you can always let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 35 points, 24,254 is what she's printing. S&P is flat. Next, and NASDAQ 100 up 30 points, about 0.5%. Russell's off 4 points. Semis are up 6 points, 0.5%. New York Stock Exchange down 0.2% or 23 points. Gold back $12, nearly 1%. Silver up 30 cents, that's down nearly 2%. Light sweet crude up 36 pennies, trading out at 57.85. Leading the charge here dollar-wise to the upside. You've got Google up $12. Revance Therapeutics up 10 and change. Amazon up 11. Coherent Inc. up 870. You've got to the downside, you've got Bitcoin Investment Trust of $220. That's trading out at 116.05. NetEase off about $10 or 3%. Edison International down 11%. Sempra Energy off 4. Mohawk Industries down 4. A lot of stocks that are down to the number 4. So we did have a couple of listeners, viewers, that did let their fingers do the walking. If you take the time to write, I'm going to take the time to go ahead and give you my set of eyes on the charts or whatever it is you're looking for. So I'm going to blend these two requests together. The first one came from Karen, who caught Tom's show last night and just simply asked if I could review my the slides, the presentation that I did during that segment. She didn't really catch it all, so I'm going to do that. And then Jane wrote in and asked if I could give the longer-term view of the Dow, if I could focus on the Dow, and she's a long-term investor, and so that's very helpful. It's always good when you write in to give me kind of your framework, your thought process, and what is it that I'm looking at to the upside, to the downside. So let me begin by taking a look at that. That's pretty good to do since we have a flattish style type market out here. So let me do this first. Let me go to the presentation that I put together. This is valuable for all listeners out here. From the beginning here we go, with regard to what it is, and because it's so pertinent to where we're at today. And to the extent that you believe the past equals the future, for many it does, and certainly we can look to the past inside stock charts to understand how the market behaved. So we can tune out a lot of the noise and what people's opinions are, and just say to ourselves, the last time something like this happened, what did the market do? And if we can wrap our head around this, I think this will help you to navigate the markets. So the last time that, if you're watching us on Tiger TV, you get to see these charts out here. I'll describe to you if you're listening on your phone, your mobile device. Now, the cool thing is if you are listening on that, you can go back and easily catch the archive of this show for a few days. Well, you can always catch it just by going to YouTube and typing in Steve Rhodes, TFNN, Trader's Edge, and the specific date, and you'll be able to pop up that show right away. So here on this chart, we're looking at, in this case here, the S&P 500. And we're going back into the 2004 timeframe. That was when Congress went ahead and passed the American Jobs Creation Act. What really took place during that time period was a repatriation of money that was overseas. You ask how much, I will tell you it was approximately $350 billion. Way different than what we're dealing with right now. But during that process, whether it created any jobs or not doesn't matter, because you and I, this is a show about taking a look at stock charts and patterns out there. We can go ahead and debate those other things, but that's not what this chart is about. This is about trying to help you navigate what is going on inside the markets, or at least what happened back then. Now, one of the things that we know is that we haven't seen a correction for a while. Now, by correction, I'm using the so-called nomenclature that is commonly out there, which would be a move of 10% or more. Bear market, 20% or more. For those of you that trade intraday, you know we start taking a look at 0.382, 0.618, and 0.786 retracements and say that's just normal. But let's just use the normal nomenclature that is out there. Well, the bottom that actually formed, or the last time back in 2004, that there was a correction, it was a 16% correction inside of the S&P 500. It was in the July-ish type time frame. This is a weekly chart that we're looking at, in 2003. From that point, and then back in June of 2004 was when the AJCA bill, AJCA bill was actually passed. There was not a correction. Is that the proper language out there? Probably not. There wasn't a correction. That sounds a lot better out there. For a period of 4.5 years. So the mere fact, and now corrections typically happen on average once every year. We haven't seen one for well over a year. We may not see one for a similar period of time. And we'll go back and we'll take a look at that. So a 4.5 year period of time. From the time period that the bill was actually passed, and this one went through rather quickly here. It was introduced June 4th. It was passed by the Senate on July 15th, 2004. It was signed by George Bush in October of 2004. And from the point in time that the bill was introduced, from the time that it was introduced, the market went without any, it went with a correction or a retracement. 8% was the largest out there, and that was for a period of 153 weeks. That equates to about 3 years out there. So the minutia and the just absolute BS that you hear in the media, it's all before Steve shared with you this chart out here. The market can go for a long period of time without any kind of even 10% correction out there. At least it did in the past. Why wouldn't it do it this time as well? Now, when I say this time, there's a amount of $2.5 trillion being repatriated back here, and it's supposed to produce a lot of jobs. Let's not get into that minutia. Let's go ahead and apply that information to this chart and try to figure out what it is that you can anticipate. When we get back from this break, we'll go through these slides. We'll go take a look at the Dow. We'll go take a look at the long-term projection. We'll go take a look at support, long-term. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. During that break there, one of the questions was if I knew what the updated amount of the repatriation funds is for corporations have cash stashed overseas. And the answer is that I don't, but it's going to be larger for each of these companies out here, with Apple being the largest. They had $215 billion back at the end of December 2016. Pfizer had $193 billion, Microsoft $125, General Electric $104, IBM $68, Merck $59. So you'll want to watch all these companies out there, and you may remember, you may know that Berkshire Hathaway, in fact, a couple of Warren's investors had started taking positions inside of Apple. You don't think that that Mr. Buffett and crew were taking those positions, not considering this? Come on, absolutely. He's the king of cash. He's the king of being able to say, "I'll collect today and maybe pay you later." That's what the insurance industry and companies all about, and that's a big part of. Anyways, let's not get into that. Let's just take a look at the stock charts out here. So, if in fact the last time we had a retracement, as I say, was in February. I didn't tell you, February 2016, a 14% retracement correction, whatever word it is you want to use, in the S&P 500. If we go for the same 4-year period of time without a correction, it takes us into 2020, June of 2020, as a matter of fact out here. So, and you can see the retracements we've had thus far have been pretty much very small. They're not, they're 3%. I had to at least put something down there on this chart to show some type of retracement. So that's what happened last time. You can make a judgment whether or not history will repeat itself or not. And don't get too caught up into, whether these guys use their funds for what they're supposed to be used for, whether it creates jobs or not. What you're interested in, at least during this show, is what happens to the stock market. Now, the other thing that people talk about, you hear them talk about, is the mere fact that the Fed is going to continue raising interest rates. And you'll hear people talk about, well, if that's going to happen, it's going to slow down the move higher out here. The truth is, that's an absolute lie. At least if we go take a look at the stock charts and compare that to the last time that we saw short-term interest rates on the rise. Well, it just so happens, out of coincidence, it was between the 2004 to 2006 time frame out there. Bottom panel of this chart shows interest rates rising by the Fed. This is taking a look at the 13-week T-bill rate out here. And you can see the S&P 500 that continued to rise during the same time period. We've seen that since the Fed has started to raise short-term rates out here, the S&P 500 has continued higher. Why would that change? And now that doesn't mean there's not some ups and downs. Come on, let's be serious out here. And this is the reason why you need to be if you're going to try to navigate these waters, you want to make sure that, in my opinion, you are very familiar with pattern recognition individuals, whether it's Larry Pesavento or Tom or David or Basil or myself or yourself. This is a time period to really be on the ball with regard to pattern recognition, because there certainly are some retracements that took place back in the 2004, 2006, but the bottom line is here that don't think that this is going to stall the markets moving higher. And I hear lots of chatter out there. Look, I've got these shows on in the background as well. They're talking about all major market tops and sell the news and all this hocus pocus, dominocus out there. This isn't magic. All we have to do is go back and take a look at chart patterns out here. Now, right now, the S&P 500 struggling. It's up a couple of points right now. The reason why it's struggling here, the reason why I contend it's struggling here, is because it's supposed to. These horizontal lines here are horizontal lines of, on a monthly basis, that is, are levels of resistance and support. And the 2640 area is a significant level of resistance. Right now, it's trying to become support, if in fact, and if we see the S&P 500 close above this 2640 level, then price is going to head to 2778. What's the time frame on that? Shoot, it could be December. Maybe it's January. I don't want to get caught into the time frames here, but once you clear a level of resistance, old resistance becomes new support. So that's the S&P 500. As far as yesterday is concerned, New York Stock Exchange, when the market closed, its advanced decline line reading was at all-time highs, as was its volume reading. Markets don't correct or give you significant market tops when that is the pattern that is out there. And then lastly, the Dow, which has been moving higher out here, it's been moving higher across the globe. Now, you and I, our focus with regard to it, and I want to thank Mr. Z in the Den for really bringing this to my attention out here, is that you stop back and you think about it. Sometimes things are just right in front of us and we don't really see it, or we don't really pay attention to it, but we really should, right? And here, when we take a look at our markets, right, you watch or maybe you see the Interactive Broker commercials that are out there. It's really on your phone, on your digital device. You could be managing your trades over in the UK, over in any country, right, around the clock. But you can invest in wherever, for the most part, wherever it is that you want to. So, look. Maybe you don't travel around the world, and I used to. I don't really that much anymore. But I do remember when I used to go over to Europe in those days where the pound was 2 to 1 out here. The same beer that I drank was basically $6. It just happened to be 6 pounds. Well, 6 pounds meant $12, for that single beer out there. Well, it was $6 in New York, and that was back in the 80s. Or 90s out here. But the reality is the way that people take a look at their markets, and everything else is in their own currency. You don't think that there's people overseas investing in the U.S. markets? Of course they are. And if you take a look at the Dow, based on 4 major currencies, yes, these are all part of the U.S. dollar. What's important is that when you see breakouts take place, that's when people like to jump into momentum moves or breakouts. Well, in the case of the euro, this is a monthly chart out here. November was very important because in November you had a breakout above a prior swing point. In the case of the yen, that breakout was many months ago. And in the case of the Great British Pound, it was back in October where there was a breakout. So there's just not money. Why is the Dow moving higher? Everybody around the world is seeing the breakout in their currency. They're putting their currency to work out here. So that says, and kind of leading into the other question with regard to, hey, can we take a look at the Dow and try to figure out where it is headed to? The answer is we can. And one of the ways that we can do this as well is we can take a look at, so I've got data in the Dow going back to 1925. 24. I'm trying to get data that goes back even further than that, just so we can construct some of these charts out here. Now, this chart here showing that is a chart on a logarithmic scale out here. So it's completely different than just taking a look at a normal chart. And this is a pretty cool way to be able to take a look at chart patterns out here. If we take a look at just simply going ahead, and you don't have to know anything about technical analysis, but all you have to do is connect the dots. Well, one of the dots that I would connect are the highs out here in 1929, just along the tops out here. And what I would do is I would just this is, by the way, connected to this little doji candle back in 1965, 1966 out here. And the real interesting thing about that is that becomes a, let me see if I can do this here. Oh, come on. I can, I know how to do it. There we go. Take a look at that line and tell me what that means to you, especially back during the 87 crash. Very interesting. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Aren't we having some fun here? Technical analysis is easy. Right? It's just the market telling you and I a story. That's all. I just get to, during the 1 to 2 o'clock time frame, be a narrator for you with regard to what the market is communicating to you and I. And then the way that the market communicates to us, we identify these levels of support or resistance, and when they fail, we know what it means out there. It's just a matter of identifying, well, where's that so-called next level, whether it's to the upside or the downside. So we take a look at this Dow chart here. This, by the way, this is a quarterly chart, so that I can squeeze enough data on this screen for you to easily take a look at. And we just simply draw a trend line off of the tops from 1929 into the 65, 66 time frame out here. And oddly enough, if you consider it oddly enough, when we did have the crash of 1987, that happens to be this little, and you already know this red bar out here. Look where price actually found support. Pretty cool. And then price, when you find support, it says, okay, I haven't busted out the lows, and price went ahead and moved higher. Heck of a nice move from the bottom in 1987 up to the highs in 2000. Now, this chart's going to look a little bit different because it's not your linear chart, but it's interesting here. We can take the same angle, going back to 1929 to 65, and we can go apply this exact same angle, the exact same angle to the high in 2000 and the high of 2007. So where I can't really predict whether a crash is going to happen or not, we can go take a look at patterns that are typically present before that, or even if there's going to be a decent-sized correction, where is it that you would identify support? Exactly. You would go back to this line, this out here, and you would say, and it's going to be different if we went to a linear chart versus this logarithmic chart out here, that's really your level of support. Now, it might seem like it's a long way down, and I'll come off of this chart here, and go to this chart here. We can draw those lines in. It's a little bit easier. Plus, that was historical data. So this is going to give you the live information. And, yeah, this is on a log scale. So let me go ahead and get a line, and we'll just draw it from the top in 2000 to the top out here. This, again, is a quarterly chart that we're taking a look at. And so real support, when we take a look at this longer term, and this is for, who was it, Jane, that sent in the request. Long-term support is down quite a ways from where we're at. We're at 24,269, and support on this is probably about 17,700. I'm not saying price is going to head back there, but if something went awry, could be anything. There's plenty of elements that are out there that could. You'd really want to be looking for support into this new level of where it should be support, that little rising log chart out there. So you might then ask yourself, what you did, well, what's the long-term pattern look like with regard to where the Dow is headed to? So let me change this from a log scale. Oh, that was, there's the log scale. Let me come back here and just up it a little bit, but it's not going to change much. Sorry, I didn't have the log scale on there. But let's go change this out of the log scale and give you where I think the longer term price projection. We're just going to simply use an A to B equals CD pattern. If our A point out here, we're going back to the 2009 low. And our B point out here, we're coming into the highs of 2015, April 2015. And the retracement, again, a quarterly chart back in July of 2015. Now, one of the things that you'll notice out here, or that you want to notice, is the lack of a retracement. A 25% retracement from the high in 2015 to the low in 2015. And take a look at how prices really moved off of that C point out here. Take a look at how strong this move is. It's on the left-hand side of that C to D leg. What that tells you and I is that price is not just going to make a one-to-one move out here. The one-to-one move would be 27,251. So, Jane, the first price target, longer term inside the Dow, longer term, is 27,251. I would say, no way, Jose. Not a chance that that's where price is going to stop, especially if it keeps this ascent to the upside, because it'll do more than your one-to-one. That only happens 60% of the time, give or take a few percentages out there. So where price is really headed to inside the Dow, longer term, is 30,480, 30,500, whatever. We're not going to use the exact number out here. In fact, 34,595 would be in the cards, just along the A to B equals CD line. So hopefully that answers your question with regard to me just narrating for you what the chart patterns are communicating to you and I. Now let's go back to these markets that aren't really doing a whole lot, or are they? Let's go find out. Let's go take a look at this, use the same, in essence, set of tools to go evaluate what's going on inside of one of the sectors that hasn't performed that well lately. Let's go take a look at the NASDAQ. One of the things that I didn't share with you, Jane, that I will if I could here. What are the things you look for to help identify any kind of significant top out there? And it's very simple. Here's a monthly chart. And if we take this back, it's the pattern that's present before any type of bear market that stops out here. And you can see that on the daily, weekly, or monthly. This happens to be the monthly charts. And it's where price moves higher, does with less relative energy. Just as it did back in 2007. You have to wait for the cavalry to arrive. In this case here, it was bears. Same pattern in 2000 before the bear market started. We always pay attention to Stevie's red line. That's very important. You can see that price is well above Stevie's red line. The trend is still up in a big time format. So that's what you would be looking for. And you and I, we look for that on all different time frames. Well, if we take a look at the NQ and you take a look at what it was signaling to you and I this morning, was price was moving lower, doing it with less relative energy out here. This is a 30-minute time frame. At about 6:30 in the morning, you can see that black diagonal lines. The cavalry woke up and arrived, not a good word out there, but they showed up for work at 7 o'clock. How do we know they showed up? Nice bullish engulfing candle. Price gets above Stevie's red line. Follow through on the very next session out here. And then voila, what do we have going on right now? Very likely we have an A to B equals CD to the upside inside of the NQ on a 30-minute basis. And that's going to give us a price projection of the following. The 1-to-1 gets you all the way back up to 63.99. Chances are that's not where it's going to stop. More likely 64.28 is its next stop out here, because only about a short of a 50% retracement. Now, why do we say that that's the pattern that's unfolding? Well, because when this price oscillator got down to, or got up to the zero line at about 12 o'clock, 12:30, we began to see price pulling back. You know as well as I do that that's the pattern that's supposed to unfold. Price pulls back, tests Stevie's red line. That's exactly what it did at 1:30, just 7 minutes ago. Bounced off of that. It was doing it during the 1 to 1:30 session out here. Bounced off. Price now headed at least back to its highs. If it takes those highs out, the highs from 11:30, then you've got your A to B equals CD to the upside. That was in the week indice. Where else does it have resistance? Well, that becomes pretty easy for you and I. If, in fact, this is more than a counter trend rally, it needs to take out Stevie's red line. What did it do yesterday on the move higher? Ran into Stevie's red line. That number, that print right now is 63.85. It's going to change over the next few hours, but not by a substantial amount out there. So likely the NQ could be just more counter trend. If price stops at that red line, 63.85, well, can't bust him up, try to bust him down. It's as simple as that. Dow's off 26, S&P's up 2. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's off about 22. So Danny in Atlanta wants to take a look at the March contract, March 2018 contract for copper. You can see since midnight, we've seen quite a precipitous move to the downside. And here we're going ahead and we're taking a look at different TAS market profiles. So the interesting thing where copper actually stopped, in essence, is where it should have stopped, Danny, which is in the longer-term chart, at the bottom of its. Let's move this up to the side. There we go. Excuse me. At the bottom of its weekly profile. Now that specific number is 295. We're trading right now at 295. So that's going to be a key level of support. You can see the structure of that box, Danny. Slightly bearish in that the center. 313 closer to the top, 324. So if price were to close below that, then where do you target? Well, we always just simply go back to a prior swing point. That's down at the swing point from September 18th in the 291 level. You break below that, well, then you're starting to take a look at, here's a breakout candle that I can see in July of 2017. So you'd be looking at 275 there, just taking things one step at a time. Now that's what, so the day, here's what we know. Weekly, you're right at support. Copper is at support. Don't know if it's going to hold or not. Short-term wise, on a 60-minute basis, there's nothing to indicate that it will. If I change this to a 30-minute time frame chart, no profiles out here to suggest that it will. So you've got nothing there to hang your hat on. If I do take a look at this continuous contract here, and my apology, on this set of charts, I have to use the continuous contract. Here's what we know. Is that the price oscillator bottom panel is right at the zero level. Now, what price was doing in essence yesterday and earlier this morning was what it should have done as price nears that zero level, get up and test Stevie's red line. Watch that bottom on that weekly chart, that profile I gave you. If it busts through there, there's some type of A to B, some type of perhaps Gartley buy pattern that is forming. What would that look like? And we don't know just yet. So I don't know. Maybe you know. Well, the Gartley pattern would look something like this. I'd come back here as my X point, right around, looks like May 8th, 2017. And then we'd start taking a look at the potential of the A to B equals CD pattern. There's our A point, our B point down around November the 15th out here. is what it looks like. Is that the low? I can't tell which low out here. So right around there. Your C point being up here on November 27th, and the A to B equals CD pattern out here. Well, the 1-to-1, where does that take us to? That's about where we're at right now. We're at the 1-to-1 A to B equals CD, but you're coming into it with a wide-ranging bar. So I'd say more likely it'd have to be something larger than that out there. And the 0.618 retracement level of that entire move gets you right into about the 277-ish type level. So you can't go there just yet because support has held. But if support fails, I'd have to say that becomes a likely target area. And you can see it's right into that breakout candle from July 25th, 2017. So that is what Dr. Copper appears to be doing. Had a question to take a look at the 30-minute and 2-hour charts for the Dow Equity Futures contract. So if we take a look at the Dow Equities Futures contract, YM, here's a 30-minute chart out here. Just like the NQ was pushing lower with less relative energy, so too has been the Dow 30-minute chart. Wave count, you're in wave number F. Or wave number 6. Price thus far on the bounce has found resistance at Stevie's red line on the 30-minute chart. So it's not above that. So the only thing that we can conclude is price is pushing lower, doing a less relative energy, but price has been able to get above resistance. Going back and forming that 7th wave, right now, that's what I would say until you see price close above about 24,270, 278 as we speak right now. But what it looks like it's trying to do, excuse me, on a short-term basis, is form a bottom, very similar to what the NQ did. The 2-hour chart, here's the 120-minute time frame chart. What pattern do we have out here? Well, the 2-hour chart would say you've got an A to B equals CD to the downside. And the reason that we say that simply we got below the B point here, and basically it's forming a Gartley, potentially forming a Gartley buy pattern. It would look like this. We'll just use this tool at this stage of the game here, 24,388, 24,385. So it would look like on the 2-hour time frame chart, because wave count wise on the way down, where are we at? B, C. As long as price stays below 24,265, then you could easily see a move down to the 24,114, 24,040 level. And that's what the 2-hour time frame chart is looking like. But before you would make that call, what you've really got, and I gave you those numbers. If we look at the daily chart out here, try to figure out what's going on, it just doesn't look bad at all. I mean, it's not as if these candlestick patterns out here on a daily basis are anything that's horrible. So that would then say, Mr. Z, I would go take a look at what's going on with regard to the profiles. In this case here, 30, 60, 240 daily and weekly, and start looking for levels of support. Well, a 30-minute chart out here has actually super strong support. You don't hear me say super strong too often, but in this case here, we have the center of the box lining up with the bottom of the box, 24,256. So that's kind of a real key level of support. It's being tested in essence as we speak right now. If it breaks through that, something super strong that breaks, says you're going to go down to the next level. And for the next level, I'd have to go into the 4-hour chart, 240-minute chart out here, because that also has a strong bullish structured box. The center closer to the bottom. Center is 24,152. Bottom is 24,095. And the top is at 24,380. So I hope that helps you with regard to, hey, Steve-O, what are the Dow equity futures contracts doing on some shorter term time frame charts? Now, you had asked for 120, so I should be kind enough to go ahead and put the 120 out here just so we can take a look at that, see if there's anything that shows up. No new pieces of information on the 120, so you just got some bonus information. Let's go take a look at what's going on inside the advanced decline oscillator readings. Still slightly above zero inside the New York Stock Exchange, slightly below zero inside the NASDAQ Composite. We'll see if it can bounce from here or not. And the spot volatility index continues to use that 50-day exponential moving average. Let's go ahead and switch over to a different chart if I can find it. If I can find it. God, it should be right here. What the heck happened? Where'd that thing go? Where did it go? I'll be a son of a gun. Wow. Where did it go? Well, I don't know the answer to that. So that's weird, but hey, so be it. Let's go back and take a look at this chart here. There we go. We'll just kind of expand it a bit. But you can see how the 50-day, you might say, what's the 50-day exponential moving average reading? 1061. What's the low today? 1065. Really, that level continues to act as just a little bit of a trampoline. It just doesn't want to give it up. That being the spot volatility index. Close below 1061, 952 becomes the new target. Steve Rhodes with TFNN. Dow's off 24, S&P's up 1. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So Jim writes in and asks if I would update each of us, each of you, on the XAU. We were taking a look at that yesterday as it was trying to form a potential bottom pattern, and if we can take a look at gold. So let's go do that with the last couple of minutes that we have together here. Now, at the end of the day, inside the XAU, it did not form its bullish reversal candle. You can clearly see that. In fact, it closed out towards the low of the session. We see that the losses inside, or the retracement inside of the XAU, continued lower. We're still in wave number 7. Price is still moving lower, doing less relative energy, and we're still inside the A to B equals CD pattern. The next projected level would be 76.34. But we really use these as guidelines out there, very much like Barbosa from what's that with Jack Sparrow? What's the name of that movie? Anyway, what is it? You know which one I mean out there. In any event, forget about that. So the XAU is still trying to, hasn't, but still trying to form a bottom. But like we talked about yesterday, can't do it without gold doing the same thing out here. So with gold trading back at $12.50 right now, what is gold doing? Well, if we go take a look at the longer-term profile inside gold, we took a look at the high-grade copper earlier on the weekly chart, getting down to support. Would it surprise you to find out that gold is doing the same thing? Now, we say the same thing out here. You've got two beautiful lines of support. You've got a little trend line coming off of the lows from December 12th, 2016. Your next touch point or flash point is July 10th. And look how price of gold just simply hit that level. 1266.10, and we're trading at 1265.40, is the bottom of its TAS weekly profile. So as in high-grade copper, prices down at support. In this case here, 2 levels of support. And if price breaks through that, I don't know that it will. If price breaks through that, it's on its way to the next level. That would be the trend line that takes you into about the 1204.05 level. Hey, folks, stay tuned. It's Terrific Tuesday. That means you've got David White, Tom O'Brien, Andy Hecht. You've got the crew. So have a great day. We'll see you on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.